Tens of millions of Americans are going to get their financial world rocked this summer. Hey everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ, back with another dose of economic reality, folks. We've got that to get into. People are going to get their wages garnished here. That's what's being predicted here. We'll talk about that here in just a few minutes. Inflation news, predictions of what's going to happen with the prices, with the cost of living, with the markets. Another prediction of destruction because of the high debt levels here. We're going to get into that, the cost of living, housing, wages, jobs, layoffs. We're going to get into it all and more. Please make sure you are subscribed. Let's go ahead and start right here. And first of all, if the cost of living wasn't high enough right now, if price levels weren't high enough, look at this, folks. There's still a way to get interest rates cut this year. That's one of the Fed governors out there, Christopher Waller. He opens the door to what he says good news. It's going to be rate cuts. I mean, some people may think that's good news, but it's actually long term, it's bad news. Now, right at the beginning, it's cheaper to borrow and your payments will be lower versus having a higher interest rate. So, of course, rate cuts are good right at the very beginning, because if prices are the same as they were and now you get a lower interest rate, your payments will be lower. For those of you that finance things, we've all financed something right at some point. But then long term, once people start borrowing this extra money because their payments are lower, it just makes prices go up, folks. So this is not a long-term solution. I'm sure most of you know this. This is, in some cases, a very short-term, not even a solution. It's short-term help. It's another Band-Aid on a broken leg. But that's how crazy this thing is, folks. I mean, the cost of living is just going to go higher if they cut rates, and that's what they're talking about doing. They're talking about putting more fuel on the fire, right? Nothing changed. They're just talking about looking for new ways to kick the can down the road for a little bit longer. And it's completely outrageous, but let me just get a little bit more in the story. A fleeting inflation bump might pave the way for more rate cuts, according to a top official there out of the bank. A fleeting inflation bump. So basically, because inflation is slowing, they're talking about rate cuts might be in store, folks. We don't need slowing inflation. We need deflation. We need a crash. We need a correction. We need some of these bubbles to burst. And that will bring in a lot of pain. There will be a lot of job losses, especially industries that are reliant on the bubbles getting bigger, like the real estate industry. That would see massive layoffs. And we've already seen a lot of agents leave the real estate industry just because of the slowdown in the transactions. We haven't even seen the bubble go bust yet. The housing bubble is still getting bigger, by the way. We just had another uptick, even though prices are down from the peak. Overall, nationally, prices are still up year over year, according to a recent report. We'll get into that in a little bit here. But yes, we need a bursting of the bubble, which is going to cause a lot of job losses. But then what happens is people can then look for a job in an industry that's not so cyclical, right? Right now, it's not very cyclical. Real estate just goes up and up and up and up. Typically, though, you have boom and bust cycles, but it seems like the powers that be, they only want the boom and they never want to allow the bust. Because if the bust happens, then it makes the ones in control, it makes them look bad, doesn't it? But isn't it getting to a point where even without a bust, these people, the powers that be, are looking pretty bad because the cost of living just keeps going up here, and rate cuts is just going to cause more problems, folks. And in fact, Go Banking Rates just came out with a survey, and a lot of people are actually wanting a recession. People are kind of thinking along the lines, like we just talked about a minute ago, that a recession may actually be needed to bring price levels down. And if you're one of the lucky few or skillful few who doesn't lose their job and still has money when the recession hits, then you're in a position to buy. I was actually in that position back in 2010. That's kind of how I fell in love with this whole recession thing. But we're not seeing a downturn. We're not seeing a recession. We're just seeing continued inflation, which I don't like. I actually like a recession more. But look at this, 30% in the survey. 30% say a recession would make them more likely to buy a home. So these people sitting on the sidelines waiting for a correction are actually wishing and praying for a recession, right? Are you in that boat? I'm loving a recession. If a recession happens, I'm good. I think I'll keep my job and I have a few different side hustles, so I think I'll be okay. But some people are frightened of a recession. Some people don't want it to happen here. So what are your thoughts? Is a recession going to be a good thing? Or will the bad outweigh the good because there's going to be so many job losses, people getting evicted, people losing their homes, too many foreclosures? Remember in 2008, a lot of people lost their home, they got foreclosed. But then other people waiting on the sidelines, then they were able to buy a home, right? So it's bad for some, but it's good for others, right? So it depends on what side of the fence you're on. Please let me know down in the comments. Recession, good or bad, or doesn't matter to you? Let me know down below. And speaking of evictions, here's a bad one here. I'm seeing these stories come up every day. Landlord, I don't want to say the word, pow pow, and unalived while trying to evict tenant. That's over in Las Vegas, folks. These are coming up every day, these stories. I try not to cover them every day because I don't want this this channel to get put into like a blood and blood and death type of category. But it's happening every day, folks. I mean, people are struggling to pay their rents and they have no other option. They feel like they have to resort to some bad things. Something with the cost of living, look at this, folks, just came out. More people cooking at home at the highest level since the start of the pandemic. I've noticed this in a few of the fast food places I went to over the past few months. Don't really get fast food very much, but the times I've went in, it's been pretty dead. The drive-thrus, I don't see the lines out to the road at the drive-thrus anymore like I used to. And that's here in California. And keep in mind, California may be different than a lot of states because we have this $20 an hour minimum wage for fast food workers that we don't have in other states. Maybe some do, but as far as I know, it's just California with this $20 an hour minimum wage. So they had to raise food prices out there. We're talking about a large milkshake's now $9. At some places, a Jamba Juice is like $10 now for the large size. You can get a small, but then you're only saving a couple dollars. They charge you like $8 for a small, and then for an extra dollar, you get like a medium, and then an extra dollar, you get a large. Might as well just get the large. But then you're out $10 with the large, right? That's how they do it with those sizes. But California, because they've had to raise wages for these workers, things cost a lot more with fast food. And I'm noticing a lot of empty drive-thrus. The fast food places are dead when I go in there. And so it's kind of defeating the purpose because with the slowdown in traffic, a lot of places are closing. A lot of places are having to lay off people. So think about that. They're laying off some people in order to pay the other people more. And then they have to raise the food prices. Does it actually fix anything at the end, right? And that's just one example of how this intervention really doesn't fix anything. It just shifts the problems from one place to another. So now you got people getting laid off in order to pay the other people more, and then you got to slow down in traffic. So these other people that are getting paid $20 an hour, they'll probably get their jobs cut completely. Of course, if the location closes, or maybe they'll get less hours. And what they might try to do, I think most likely, and this is just a business thing, a lot of businesses do this, is they'll try to just get more work out of less people. So the ones that aren't getting let go, make them do the job of two people. Make that one person getting $20 an hour do the job of two people. And so they're going to be working twice as hard. They're going to be stressed out, more likely to quit, more likely to go on strike and demand higher wages, even higher than the $20 an hour, folks. It's a big mess, but we'll keep you updated on the fast food situation here in California. But yeah, out of CNBC, more people cooking at home, the highest levels since the start of the health crisis, folks. Cooking at home. I've been cooking at home more. I started grilling a lot, last year? Bought a new grill. Saving some money there. Better food, too. This comes as the tariffs raise fears of a recession. So some people fear the recession, but just like in that previous report, some people want a recession because that's going to be a buying opportunity for a few people that are ready and prepared for a downturn. All right, moving on here, folks. We got Jim Cramer out there. Buy, sell. I haven't watched this show in a while, but I do read articles about him sometimes. Predicts we're headed to prices we're not used to. Well, I think we're already there. He says you should invest $50 a month to tackle financial uncertainty. I'm right there with him on that. I mean, I don't agree with a lot of what he says, but yeah, invest. I mean, invest. Look for dip buys. I wouldn't be going all in on anything right now. I would wait for prices to come down. If I see a 25% any index or any indice, the Dow Jones, S&P, NASDAQ, I will go in and I'll buy some. I won't go all in. But typically, if you see a 25% correction like we saw a couple months ago, it's going to go back up, right? We're buying the dips right now because monetary policy hasn't really changed. In fact, banks are getting a lot more get out of jail free cards, right? If you know what I mean. So I'm buying any dip right now. If it's a significant enough pullback, I'm buying the dip, whether it's crypto, whether it's the markets, what have you, individual stocks. If I see a good buy, we'll go in and buy the dip on it here. All right, folks, here's what to look out for this summer, whether you're a student or not with this debt. But look what's going to be happening, folks. Wage garnishment coming this summer for defaulted student loans. And right now it's over 10 million people, what I read, that are already delinquent on their loans. So a lot of people, one, are already, not is going to happen, not this summer, already right now, as of today, their credit scores are tanking. We've got between 4 to 6 million people have already seen their scores drop. And I think it was 1 to 2 million. It's already dropped their scores by over 100 points. So they're already going to have a tough time getting a low interest rate on their credit cards. We already know rates are high on their credit cards. So it's going to be adding pain to already punishment for those people. And now wages being garnished starting this summer, folks. So it's going to be a double whammy for a lot of these people. Millions of U.S. borrowers who defaulted on their student loans going to get their wages garnished. They want us to pay to read this article. I think I'll skip that, but you can tell what's going to happen here by the headlines, folks. Wage garnishment for defaulted student loans begins this summer. Is that going to show up in the economy? Is that going to lead to this economic downturn / recession that many people are hoping for? Please let me know what you think about this down in comments. Here's another CNBC. Wage garnishment for defaulted student loans begins this summer. Here's what borrowers need to know. Now, with these student loans, there was a recent video put out about the reasoning behind it here. Let's take a listen. By the way, Secretary of Education, Ms. McMahon, take a listen.
In case you missed it, the Department of Education announced that on May 5th, we will restart collections of student loans in default. The federal student loan portfolio stands at nearly $1.7 trillion, and only 4 in 10 student borrowers are in repayment. Unlike the previous administration, who made false promises and pushed an illegal student loan bailout, we will not force American taxpayers to take on the debts that are not theirs.
Taxpayers are not taking on the debt that's not theirs.
There's no such thing as forgiveness, just shifting the payment burden from one party to another. Borrowers should pay back the debts they take on. Please visit studentaid.gov for more information on student loan repayment options.
Here we go. All right, people, moving on here. Costs of living. We got Walmart out there, and a Walmart person reporting price hikes of 38% or more on some prices. Also, we're also seeing Target. People talking about big price increases there. And one example, Walmart label shows a price of Jurassic World T-Rex toy jumped from $39.92 to $55. Wow, an increase of 38%. That's an expensive toy there, folks. What's the country going to do? This is a disaster. A mega disaster with $55 dinosaur toys, folks. Go on strike. Don't pay $55 for the dinosaur toy, and they'll be forced to lower the price. Then you can all play with your dinosaurs at a lower price. All right, let's move on here, folks. Banks, unrealized losses, folks. Look at this. $413 billion in unrealized losses hit U.S. banks as FDIC warns rising rates are adding pressure. Will the banks break? Or are they just going to get free money from you-know-who? Good question. Let me know the answer down below. A couple things, folks, before we wrap up here. We've got entertainment news to bring to you. Netflix is still going strong, still adding subscribers. Like we talked about a couple reports ago, people that can't afford homes, people that are living at home, they can buy things like entertainment stuff. They can go to baseball games. They can travel because many of them live at home. They don't pay rent. And so this is what they do. They spend their money on entertainment stuff. Netflix is now coming out with a Frankenstein sequel, a stunning trailer for Guillermo del Toro's Dark Passion project. A remake of the classic monster tale is getting a reaction that's good and bad. Here's the Frankenstein. This is why I wanted to bring it up here. Take a look at Frankenstein. That's much different looking Frankenstein, isn't he? Let me just bring up a big picture here. How's that for Frankenstein? That's crazy, folks. I think people will tune in just to see how they created this monster. All right, everybody. Let me know what you think down in the comments. The warning about collections coming this summer for tens of millions of people with these loans that they can't pay back, folks. Is it going to be an avalanche beginning this summer? Or will they find a way to keep the bubbles inflated and it's going to be stagflation or just more inflation? Everybody, please let me know down in the comments. And are you investing at this time, or are you holding cash waiting for a recession? Like what 30% of people said they want a recession so they can finally afford a home. That's what they said. Is that what you think? Do you agree with that? Or do you disagree? Let me know down in comments. Please make sure you subscribe. Everybody keep stacking. Bye for now. Peace.